This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Taylor from Life Goal Investments. How you doing, buddy?
Doing well. I almost jumped the gun on this one.
We had an abrupt ending to video number one where Taylor tried to get into topic number two.
He told me to shut up immediately. He didn't, but he did.
Yeah, I did, but I did. I really did. And that really is what I'm looking at the market today. Is the market might finally be getting it. I think they finally realized that the Fed is trying to slow it down. I think what's really happening today is people have reprioritized. Inflation is no longer number one. It is a distant number two. And recession. What do you see today? Because today's, the 10-year's up like 11 basis points or something. Pretty crazy.
Yeah, it's interesting to the 10-year is a pretty good barometer usually in the direction of it. If the 10-year yield is going up, that means things are more rosy outlook from an economic standpoint. Now, inflation isn't rosy, but inflation will drive it up as well. But on the other side, when the 10-year is coming down, that's obviously an indicator that you're having more troubles from an economic standpoint. And today, it's up 10 basis points. But on the whole, look back over the last 2 months, and it's down from 425 to the mid threes, which is, a welcomed reprieve for any bondholder out there. And I think that is, to your point, showing the market that directionally, although it's up today, directionally, we are going into a more labored economic backdrop than we have been in the past.
Yeah. And I think what people are going to see, again, we're right on the cusp maybe of a Santa Claus rally. Maybe he's drunk and not showing up. Who knows? But I think there's too much eggnog. I think there's a general feeling that analysts will be doing some pretty meaningful earnings cuts in January. I think that's
who's been calling for that. Not this Wall Street guy, right?
Yeah, it's coming, I think. And I think you're seeing the other thing that I think is happening is consumers are starting to retreat. We saw a horrible retail sales number last week, which I actually thought was the most meaningful number of the week. And that's in a CPI week and a Fed week. Basically, the consumer's retreating. And if people don't know, the consumer all by themselves, all by our lonesome, we can create a recession all by ourselves.
Oh, that's where this recession is going to come from. I say that, and then I backpedal on it a little bit because corporations are going to feel it too. When you are going out to build a factory or take on debt to bring on new employees, and the rates go from last year being, you can get it depending on the quality of your company, a 6% note, and all of a sudden it's a 9% note now, and you go, is that incremental employee actually going to add 10% to the bottom line relative to what they cost? I don't know. That's got to be a darn good employee.
Yeah. It is going to be a wild year, right? Interest rate debts being repriced. I think it's really funny when I think about Wall Street, right? Again, very much an outsider's view. I think this year has been pretty rough, meaning IPOs down, acquisitions down.
Non-existent.
Right? Non-existent, right? We just heard Goldman Sachs again laying off 8%. I think there's more blood coming. Bonuses going down. I forget who said that.
Let me interject. I don't mean to cut you off, but think about Goldman Sachs. A big division of their company is to go out and find two companies to put together and merge, or to drive an IPO, or to do whatever it is. That market is non-existent. How do they continue to employ, whatever, an eighth of their workforce or whatever it is of super, super, super highly paid people if that market is just frozen?
Yeah, it is interesting. One thing I'd love to talk to you about, again, kind of private equity or Wall Street, maybe even like kind of the Goldman angle to this, is what Elon Musk has done at Twitter. And I'm not talking about all the craziness. I'm talking about whacking 50% of headcount, arguably now potentially up to as high as 70%. And the company is still performing, at least from an infrastructure perspective. There's talk of ad revenue going down and all of this. Where I'm going is, so I come from a software background, software as a service. I've been at pre-IPO companies, public companies. I've been an executive, so I understand the income and balance sheet, cash flow, all of that. I actually think, and I got this from the All In podcast, and I think they're absolutely right. I think one thing that Goldman Sachs, this group you just talked about, I think they're going to see private equity buy these companies like Copa Software just got purchased. They're going to buy them for the income stream, whack headcount, still keep the stream going, And I think that's going to be a business model going forward.
That is absolutely, that's what happens in a recession. In a recession, you buy things, trim the fat, you make people work 2 times as hard. And remind you, so I heard this stat in a business class way back when. I don't know if I've ever mentioned to you or not, but anyway, in a business class from a very high level, reputable CEO came in and guest spoke with us, and he said, "We know that our employees work 3 hours a day. Actual work time is 3 hours a day." He said there's
Right.
so much statistical data out there, and this has been data science driven, 3 hours of production a day. So he says when things get tough, what you do is you whack, and that person can work 4, 5, or 6 hours a day if they're scared for their job, which is a
Right.
fear mentality. Like I totally get that that's not great from a cultural perspective, but at the end of the day, if it's that or go home and sit on the couch and collect unemployment or whatever it is, you're darn well going to pick up your efforts and start performing. And you know what you're also going to do? You're going to go back to the office.
Exactly. Yeah, I think back to office is coming. I actually think there will be more acquisitions or taken privates or whatever you want to call that by private equity significantly in the technology space. This is actually, and again, I love the fact that I have receipts. One of the things I said about all these Kathy Wood investments is I said the best thing she could hope for is a recession where somebody comes in and buys one of these companies at a premium.
Yep.
Right. And some of her companies are going to get purchased for pennies, but at least she'll have an exit. She'll get out of these instead of going to zero.
It's funny on the back to work kind of topic, and not that people weren't working at home, they were, but you know, the shadow
Some of
the
them had
boss is
2 jobs, dude. There's more and more people going, hey, I work at Oracle and I work at this. I work here and I work there. I'm like, that is going to come back to bite people.
I've got a buddy who works for a very big tech company, and I saw him a lot throughout the summer, throughout the spring, etc. And I have not seen him. And I'm like, hey, what's going on? He's like, hey, I'm traveling. And I'm like, oh,
I am on the
I
road.
get it. I get it now. I understand exactly what you're saying with that. You have to be out in front of people. You have to be out in front of your boss. You have to be showing that you're driving revenue stream at the end of the day.
Yeah,
Um,
I had a spreadsheet. I remember sitting in a conference room. I was big conference room, big desk with a spreadsheet, and I had to whack. I think it was like 19% of it or something. And again, it was
and
really easy. Who I didn't
and
see, easy cut.
I've never done that.
It's
How
horrible.
Yeah,
It's
yeah.
horrible.
You're like a grim reaper, right?
Oh,
So you just said one of the easy decision-making things that was easy to drive the decision to people you didn't see. Like totally get
yeah.
that. How hard was it to determine who was getting cut outside of that? Is it very easy to know? Because like I know as a coworker perspective, like back in my Wall Street days, I could look at this and say like, okay, there's 10 people next to me. Like I go like those 3, they are good employees. Like I would whack them. But like if you have to
Yeah.
go deeper than that, sometimes it seems like it might get pretty darn difficult.
Yeah. So I've had to do layoffs a couple of different times. It's just the problem being an executive through a couple of recessions. Generally speaking, 50% of them are easy, performance, whatever, but it's always hard. I mean, I don't remember a layoff where I didn't struggle with at least half.
Yeah.
And you do everything you can, bend over backwards and close recs, and kind of, could this person do this? I mean, it's horrible. You're delivering horrible news.
Yeah.
And
Yeah.
it's something I am so thankful not to ever have to do again. That was so bad.
Yeah. Yeah. So I wanted to talk about something real quick here on the kind of private equity note or whatever it may be, back to that kind of private capital, raising
Yeah.
money, et cetera. Because I've done some of that, raising capital to start companies, et cetera. And it was funny. Some of that was happening 2 years ago, and even through last year. And everyone that we spoke with were like, hey, oh, you're in the financial space. Like, what do you have in the crypto area?
No.
And we're like, no, we're kind of like the antithesis of that. Like we
Yeah.
kind of do like stable, steady investments, grow slowly over time, like look towards down the road and do things by churning out constant compounding returns. Like we kind of actually don't believe in crypto. And they're like, all right, later.
Right. Later,
And
done. Shut the door.
I think so that's not a reflection on our ability to raise capital with our idea. What I wanted to speak about that is I think that the private equity market has taken a massive black eye with this crypto experience. And I think that what a lot of their investors have done now is, in this FTX thing exacerbated the whole thing, but they say, okay, what did you understand about this company? What didn't you understand about this company?
How deep was that due diligence?
Right. And how much of a steward of capital do I believe that you are going forward? And so I think that this is a massive hit on the ability for private equity firms, hedge funds, whatever it may be, to raise capital, because people look at them and say, and if you destroy capital, you should have your hands smacked. And they're getting their hands smacked right now in a bad way. And the thing about crypto is when you look back at it, 2021, 2020, even before that, there were a lot of bright minds on the side of crypto. Think about a Mark Cuban. Is Mark Cuban an investor? I don't know if he's an investor or not, but he made some of the best. Now I'm in a rabbit hole. He made one of the best options trade to protect himself when he sold ever of all time. So he's a bright mind. And when he comes behind and stands behind some of these things and says the technology behind it's sound, on and on, it's just, the problem with it is maybe Mark understood it, right? And he really does believe in the backing of the technology, but a lot of people don't understand the underlying components of what this is, why this is valuable, and what is driving this Bitcoin to go from $4,000 5 years ago to $68,000 at the peak of last year. And do you actually understand? My main rule of investing to anybody, anywhere, is if you don't understand it, you can't invest in it. If you can't explain to me concisely what the value proposition of the company is, the entity, whatever it is, you can't invest in it. How can you then have any skin on your own back at the end of the day when it goes down and you go, you know what? I didn't know what I was buying.
Yeah, I didn't know the CFO was in the metaverse. Really? That's kind of like an easy thing to check out, I would think. Yeah.
Yeah, it's crazy. And so here's the thing. I'm reading a book. My mother just gave it to me, Malcolm Gladwell, called Talking to Strangers. And the whole premise of the book, human beings to truth and fault to, even if we're suspect of something, we think that stranger is telling us the truth. And so it takes overwhelming evidence to prove that they're not, in order for us and our human and our innate nature to say, okay, this person's shady, I'm staying away from that. It takes a lot of evidence right now. So like Sam Bankman-Fried is such a good example. There were so many red flags that went up along the way. I think right now this Binance CEO, CZ, I don't know what his name is, CZ, when I watch him, my skin crawls a little bit.
Oh, Becky Quick, I think that's who it was.
Becky Quick abused him. Good for her. I was
that was horrible.
It was uncomfortable to watch, right? It really was.
I run.
And a lot of things is like when you think about crypto, and now I'm just on this talk track, so sorry.
Well, let me kind of round this up, because I got a 10 o'clock I got to get to.
Yeah. Go ahead.
What I would tell people, and I've said this and it seems like we agree, the last 2 years it's been about quick money, Ponzi schemes, appreciation, betting, gambling.
Totally.
The next 2 years is going to be about good operators, and we are heading into what I think will be a recession. Recessions are where good operators thrive. And I'm excited because the last 2 years have been uncomfortable for me. I like to do the work. I like to grind. I wrote 250 offers and got 3 counters. Nothing worked because everybody was overpaying. Well, it flipped the script. I got 2 deals now the last 8 weeks. We're writing just as many offers. We're getting counters on almost everyone. So operations, a good operator will be a steward of capital and have an amazing 2-year run. So I'm ecstatic.
So on our side of the equation, we do the exact same thing you do, but with stocks, bonds, etc. Is the name of the game outside of the cryptos and just buying Tesla, whatever it is, has been index investing. Buy the index, it goes up. Buy the index, it goes up. What you're going to see is a separation of good and bad, and you're going to be able to poke holes through companies and say, I'm staying away from that one. Wouldn't touch it with a 10-foot pole. But this one over here is being undervalued for XYZ reason. I can see the fundamentals behind it. And I think that the indexes are going to start to trail the active manager versus it's been the other way around with this low cost environment of capital that we've been in now for more than a decade.
You got it. Well, with that, Taylor, folks, go to Life Goal Investments on IG. Give them a follow. Tell them you came from One Rental at a Time. I would greatly appreciate it. Talk next week.
You're the man, Michael.